Ladies and gentlemen, good day and welcome to the Kelton Tech Solutions Limited Q4FY21 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. I would like to thank you all for participating in the company's earnings call for the fourth quarter of the financial year 2021. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's con call may be forward-looking in nature, and such forward-looking statements are subject to risks and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made from the information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and a financial quarter under review. Now, I would like to introduce you to the management participating with us in today's earnings call. We have with us Mr. Niranjan Chintan, Chairman and Whole-Time Director, and Mr. Karanjeet Singh, Chief Executive Officer, India, and Mr. Srinivas Pothluri, Chief Executive Officer, US. I now hand over the conference over to the management. Thank you, and over to you.
That we have published also. We'll first start off with talking about the financial numbers, and then we'll give a commentary on operations, and then we'll take Q&A. So we'll start off with year-end revenue numbers. We have 780 crores revenue for the financial year 2021, which is slightly more than what we had last year. But I want to give some color around that. The first 2 quarters of the 2021 financial year have been pretty bad because of the COVID effect. Despite that, we were able to recover and come back strong, and came back to a little better than last year's number. Just to give you a perspective, some of our business units, we lost revenue of 30% in the first 2 quarters, and that we have significantly recovered, and now we are back to where we were last year. That is an achievement that we have been happy to inform you. Now, the EBITDA is around 14.4%, slightly less than what it was last year. Again, we want to bring you notice because of the first 2 quarters effect, that is reflecting here. The PAT is around 9.1%. That is the financial year 2021, the whole year number. So coming to Q4 of 2021, we have a revenue of 208 crores, which is more than last quarter by about 6%. While the EBITDA was 14.2%, a slight decline to last quarter. That is primarily due to increase in employment costs. We did an appraisal in December. Typically, we do appraisals in August, but we did the appraisal in December because of COVID, and there were increments that were given. In addition to that, we've been hiring aggressively, and since the labor market has tightened dramatically in the IT sector, we had to spend more money than what we planned for. So that's what is reflected in a reduced number when it comes to the EBITDA. The PAT is around 9.1%, which is again slightly less than what it was for last quarter. But overall, the whole year wise, we are the same number as what we were last year. And that is again a reflection of how we were able to recover from the first 2 quarters. In addition to this, in the last quarter we added 12 new clients. Let Karanjeet talk about that in detail on these. When I'm going to hand over to Karanjeet now to talk about in India, APAC operations, as well as the new client wins that we have for this quarter. Karanjeet, over to you. I hear that people are not able to hear me. Aisha, can you add Karanjeet back? Looks like we lost Karanjeet.
Yes, I am there, sir.
Okay, while they're waiting on Karanjeet to join, Srini, can you talk about U.S. operations and what is happening in the U.S. in the current market with the COVID and all the stuff?
Sure, absolutely. Are you all able to hear me?
Yes.
Yes, you are.
Okay. Excellent. So in the U.S., things are slightly different from the way they are in India. Services have begun to open up in the U.S. We have seen customers put their plans together for resumption of normal operations starting June, July. And we have also been informed by some of our customers that Kelton consultants should plan to be on client site starting July, August. So we are making those plans. Most of our offices are already open. Internal consultants and support staff are already coming into work 3 days a week in most areas. So we will continue those, and hopefully by July, August, we will all be fully operational here in the U.S. Travel has opened up considerably, and we are experiencing increasing activities at airports. International travel, not as much, but travel internally within the U.S. is back almost to normal. We are seeing airlines increase their capacity since there's a lot of trouble with tickets, etc., and so on. So what we are also seeing is a tightening up of the labor market, as Niranjan has pointed out. This seems to be a global phenomenon. We're noticing it here in the U.S., and it's also being noticed in India. Resource availability has become a challenge across all areas, not only IT, but also in a lot of the retail sector, as well as business process owners. This is very interesting. Clients are losing some senior business process owners that have decided to retire rather than return to regular in-person work that some of the clients are requesting or demanding. So clients are accelerating their internal hirings to support large CapEx projects that require the presence of internal business project owners. So in general, AMS and support projects are continuing, and renewals are coming in, along with small operational projects. CapEx-related strategic initiatives, large ticket items, have just begun to sign. Customers are beginning to sign those at this point, and we are beginning to see activity ramping up, etc. So we should be seeing a lot more large project startups and kickoffs happening in the month of June, July, and August. So this quarter is obviously really important from a perspective of starting big projects. And I'm assuming that most of these would have started up last year if it were not for the availability of resources internally within the client side. So that is the update. Things are looking good. Travel is opening up. A lot of activity. A lot of the morale is high. So this should be a great. Looking forward to a great quarter now.
Thank you, Srini. Karanjit, sorry, Srini, you want to say something?
No. Anything else? Any questions or?
No, we'll take the questions later, Srini. So Karanjit, can you talk about the 12 client wins that we had for this quarter in addition to India operations and the APAC operations? What is happening there? Can you give us a brief on that?
Yes, thank you, Niranjan. Yes, I'll do that. So this quarter we had 12 new client additions. These were across industries. So we had clients in fintech, healthcare, pet care, hotels, travels and events, and manufacturing, supply chain and warehousing management. We signed up a supply chain management company where we will be doing some digital meshing of all their various data points for reporting and workflow automation. We signed up a leading healthcare organization where we will be helping them with their legacy digital landscape modernization. Similarly, we've signed up a real estate agency company where we're going to help them with the loyalty programs and a new age engagement, which is now become very important in the new COVID world. Similarly, we've signed up with a financial fintech company to build. This is actually a new initiative, so it's building a comprehensive digital payment solution and so on and so forth. So what we have seen is while there are industries that have got impacted, but there are also a lot of digital initiatives that got accelerated, and that is reflected in all these wins. Coming to the India and Asia Pacific operations, similar to whatever Srini said last year, there was an overall impact. However, in the Q3, Q4 of last year, we had signed up some good clients, and in fact, we're happy to report that we just went live with a big Indian media house on their OTT, a new age OTT and cloud native CMS. Similarly, we had signed up again a digital initiative for a QSR, big brand name in the Middle East, and we've been going live across multiple countries with them in phases. And very recently, we have signed up a cutting edge NFT-based platform marketplace that we're creating, including blockchain. So these are all the kind of things that are happening. But of course, the Indian second wave obviously has impacted India locally. While things have not really, gone completely to the cold freezer like the beginning of COVID last year. However, obviously there were concerns and things have gone a little slow. Also, employees were also kind of impacted. Employees, the families were impacted, so that did lead to some challenges in project delivery. But we're happy to report that we were able to deliver almost everything as planned in spite of all these challenges. And of course, during this time, we are still, things are coming back online in India. We would know Delhi, our largest development center, is in Gurgaon. So obviously, Delhi was very badly impacted, the whole NCR region. So that did lead to some challenges, but our employees have weathered that well. And now things are coming back online. As Srini said, US is pretty much opening up. UK was also in a bad situation last year, but they've also now started coming online. So we're hoping that now things will, only get better from here, and we'll have a great quarter.
Okay. Thank you, Karanjit. A little bit on the European side, let me state that, the last year has been bad for European, revenue. There was a dip in revenue when it comes to Europe. But we have some exciting news where we have hired a new head of Europe, and he has just joined us on June 1st. So this year is going to be exciting in Europe. We are hoping that things are settled down in UK. I know there is a prediction of this Delta variant going very strong there, and there could be 100,000 cases again per day in UK. But we're hoping that despite that, we will have a better year than what we had last year for this year, because we have this person that has joined us. He was an ex-Wipro person, comes very highly recommended, and he has a lot of track record. We are hoping to replicate some of the things that he has done within Kelton and grow that European division. So we are very excited about that part of the business side of that geo too. Okay. With that, I want to open up for questions. So Aisha, so let's see what kind of can you create a queue for the questions, please?
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, Anyone who wishes to ask a question may press star and one now. The first question is from the line of Mohit Jain from M&M Investments. Please go ahead.
Good evening, Mohit.
Yeah, good evening. I just wanted to ask this one. When you are saying your expenses have increased because of the labor shortage and all, so I think the end product also you might be having a good rate then. I mean to say pricing. So it should compensate with that. And margins, as I've seen the other names, you can have Wipro, Infy, or the second rung range. They generally have margins of around 18 to 22%. But why Kelton is doing 9%, 8% since hardware is not there now?
Okay. So their business model is slightly different, where we have on-site staff, they're doing a lot of outsourced work. Now, talking about, customer charges that we're doing, because of COVID, we in some cases, we did give some discounts too. This is something that we have done in Q1 and Q2. That there is a legacy effect of that into our numbers for this year. Now, are we increasing the rates because our labor rate has gone? Not at this time, because there are still lingering effects of COVID that every customer of ours is facing. We are mindful of that, and we are also in it for the long game, where we have partnerships for years and years to come. So that's the reason why we have put our rates as are stagnant, whereas our costs are going up. But that is something that we may revisit once this fog of this COVID goes away. I mean, there are predictions that there's going to be a third wave. So we are mindful, and we have to work with our customers because their businesses also are getting affected. That's the reason why. So your question on the big boys of IT, they do have a different business model than what we have. Just to give a perspective, we are close to 1,600 employees that we have within the company. Of that, 600 are outside India. So that's been a business model that we had, and that is something that could potentially change because we get better margins if the project is outsourced to India versus doing it in-country or near shore. So that is taking a little bit of time for us to move the contracts over. But with COVID, hopefully that we would be able to move all these contracts, or not all, some of these contracts to India, so to give increased margins.
What about the blockchain? That is, blockchain is a good business. I heard. I don't know exactly, but this based on the news what we hear, blockchain is a good thing, and I think you must be having a good margin in that because it's a new area for you.
So, see, this is an open call. I don't want the customer to know. Yes, the rates are higher. I don't want to talk about margins specific to customers. That defeats the purpose of some of the stuff that we do with the customers. So to give you an idea, yes, the new cutting edge kind of business, we always get higher margins, whereas these run-of-the-mills, the enterprise related work that we do, because it's a commodity play, we do get lower margins. So to answer your question for high-end, high-tech, yes, their margins are better than the low-end ones.
Okay. So do we think the second quarter will be better or is equal to the last year YOY, or it will remain same?
For this quarter, probably, year on year will be much better, right? But, that we are comparing at a low base, right? I want to make sure I caution you because the Q1 of last year was pretty bad. Because that's when the COVID surge has happened or COVID lockdowns have happened. This year, in India, yes, there is a lockdown. Despite that, we've been working. But, what is the impact of COVID is still out there. We don't have the numbers. But what I can say is that there is a pressure when it comes to cash flow, when it comes to this quarter. The reason is people are working remotely, offices are shut down, collections are taking longer. We have an order of 50 to 60% collections that are happening. So that gives you a perspective of some of the cash challenges that we would have for this quarter. But hopefully, I keep reading news that we're going to come back strong out of this. And if we come back strong out of this, and if there is a third wave and the impact is not as big as the second wave, absolutely, we'll be doing much better in Q2. Q1 probably will do better than last year, but again, like I said, it's a base effect is there.
Okay, not a problem. Thanks. This answers my question. Thank you.
Thank you, Mohit.
Thank you. We would request the participants to please press star and 1 to ask a question. The next question is from the line of Vibhor Gupta, an individual investor. Please go ahead.
Hi, Niranjan.
Hi, Vibhor.
So, first of all, congratulations on the number which you achieved in this quarter and for the financial year.
Thank you.
I have two questions. First is, how is the order book pipeline looking for the next quarter and the next year, for the complete year, I mean. Second is, we have won quite a lot of new deals, like Ranjit mentioned around 12 deals. So what is the ballpark deal size for these contracts, and when can we expect the revenues to be realized from the deal?
Okay, let me answer your second question first. The deal sizes vary from a few $100,000 to, it initially starts off, since we are in the digital transformation space, the deal sizes are smaller. Initially starts off with a few $100,000 where, they are starting a new initiative, and then we burrow deep and get into more and more, other business areas, and we get a lot of it. So if you look at it, we always look at the customer, the long-term customer revenue perspective, what we can get versus the short-term one deal, what it is. Now, coming to your question on the pipeline is very strong. We have order book currently of backlog of over 6 months of revenue for what we had for last year, and that is continuing to grow. The funnel is a lot bigger than what it is, and we are every day adding new customers. Your other question was related to when do we start realizing revenue. Some of these things, all the way from the NFT that Karanjit talked about, we have already started billing. Karanjit, correct me if I'm wrong, I think the first MVP is due in August for the NFT. That's just for people who are not familiar with it, it's non-fungible tokens, which is the blockchain, underlying technology is blockchain. Karanjit, am I right in the August timeline for the MVP?
Yes, sir.
Okay. So that gives you a perspective that we already are working with these customers. But typically what happens is, the revenue size for the first 2 quarters is smaller when it compared to, the other quarters that, as we start billing, customers start seeing the value of what we provide, the more and more opportunities come to us and our revenue goes up.
Okay, thank you. I have some other questions, but I'll join the queue back. Thank you.
Thank you, Vibhor.
Thank you. Anyone who wishes to ask a question may press star and 1 now. The next question is from the line of Varun Kumar, an individual investor. Please go ahead.
Hi, Varun.
Hi, Niranjan. Hi, everyone in the management. And congratulations on the numbers and the growth compared to last year's number, I would say. So I would like to congratulate on that.
Thank you.
Yeah. So I have this question. So the growth is there, but I see it's quite stagnant comparatively. So what initiative is company taking to increase this number more in the coming time? And are we concentrating more on top line or bottom line consolidation going forward? So, what's the plan for increasing the numbers to sum up?
Okay. Thank you, Varun. So last few years, you're right. The company top line and bottom line has been stagnant. But I wanted to bring to your attention that we did hive off 2 of our subsidiaries. We sold out 2 of our subsidiaries, and that impact is also there on the top line and the bottom line. If my memory serves right, we are probably around 120 to 150 crores. I don't know exact number of revenue that we lost by selling those 2 companies, and that we recouped by last year. And this year, as you are aware, because of the COVID, there was some significant revenue dip in the first 2 quarters, and that also we're able to recover. But your question is still valid when it comes to what are we doing on how to grow the companies. So we have hired an external consultant who has been around in this industry and has grown companies to $1 billion size. So he is helping us with the growth acceleration, and there are avenues, and one of the hires that we made is with his input is for the European head of operations that I talked about earlier. So we have a lot of exciting things to come down the pike. Over the next 45 days, we would be making some changes, making some announcements that would give you a perspective of what all the different initiatives that the company is making. But yes, we are mindful that we are stagnant, and yes, we are working aggressively on the growth acceleration. And this consultant, who comes very highly recommended, is helping us with this strategy of how to grow. Because what we felt is just the management itself, we do have a lot of I guess day-to-day operational stuff, and we are not able to focus on the growth side of it. So we hired this consultant, and he's got some very good ideas. So I would say stay tuned. Give us 45 more days, and we'll be coming out with an announcement on what all the changes that are happening.
Okay, thank you. So my next question would be like, recently you announced the product K Live, that is the new real estate solution which was announced. So are you seeing any traction over there from any clients? Could you just tell us about the solution as well, just more in detail, if you could enlighten? That would be
sure.
Great.
I'll let Karanjit answer this, but this K Live was primarily for the UK geo is where we wanted to start off with. We were doing a lot of projects, similar projects for multiple customers, and we felt that we built a solution/platform that we could be able to get a lot more bang for the buck for the customer, and also we would be able to do a quick sell. So that's the reason why we launched this K Live. Karanjit, do you want to add some color to that, Karanjit?
Yes. So we actually have worked with some real estate customers, especially in UK, and we felt that we could actually build and add. So most of these products, whatever we were doing was mostly legacy. We have exposure to that, and we felt it was pretty old style and legacy. So what we did is we said, let's use our accumulated knowledge around this, and we use our experience there. And so we basically launched this product, and the strength there is the AI and the smart analytics, as well as integrating with the newer workflows that are expected today, like things like a package drop or dynamic requests that have become very common nowadays. So this kind of has a lot of features apart from the usual, app and tenancy management. It's got all these other things like package tracking, mitigation with things, and all that. In terms of traction, yes, we actually after we launched it, we actually got a lot of inquiries. But then again, as Niranjan explained before, UK kind of went through its own waves with COVID. So it's kind of that is the environment that is like that. And so while the conversations are continuing, and we are continuing to engage with the clients, but they go on and off, and we hope that we will have some traction very soon.
Thank you, Karanjit.
Thank you. The next question is from the line of Gopal Krishnan. Please go ahead.
Hi, Gopal Krishnan.
So I have a question about the revenue growth in the segment wise. So if I see in digital transformation, I could see a good improvement in the revenue wise, but in enterprise solution, it's keep on reducing. So whether it's a good thing for the company or any plan to increase the revenue in enterprise solution also?
So to answer your question there, Gopal Krishnan, most of these enterprises, they would have a legacy system. So the work on legacy systems is typically has been run and maintain it. They are not doing new initiatives or what we call the capital investments that currently and Srini talked about earlier. So they are just making sure that the system is up and running and patched and ready to go with the new versions of software that is coming. So any new initiatives they are doing in the digital transformation space. With that said, what happens is because the legacy system is there, we would have to build some hooks to work with the legacy systems. So what we do is we provide a front-facing some kind of a middleware kind of a solution where that will make the hooks into the back end and works with the digital side or the digital transformation side. That could be the web, or it could be the mobile, or it could be any of these new cool IT ones, IoTs, the SMAC. So AIs, all that stuff is coming in the front end side of it. So the back end work is going to reduce as our revenue goes up. There will be always going to be enterprise the customers and enterprise services that would be offering, but that would shrink because more and more investment is happening on the digital side. And also the other thing also, Gopal Krishnan, is that there are some end of lives for these enterprise softwares or solutions that are there. So they would be forced to migrate over to the digital way of doing new things. I'm talking about the SAPs, the Oracles of the world. They are offering new age solutions with the digital, keeping digital in mind, while the legacy is going to be sunsetted.
Yeah, thanks. I can understand. Yeah. So the second question is about the debt. So as previous earning call, you mentioned like in 2022, mostly we will be the debt-free company. So is it focused as it is promised, or how it?
So we are working towards that, right? So my only caution that I'm going to make is two things. One, yes, in these hard times, we are conserving cash. Could we pay down the debt? Yes, we could. But at the same time, I do want to put some money aside for this rainy day. As you are aware, like I said, the COVID has taken us, hit us pretty bad the first 2 quarters. Yes, today we are sitting on a little bit of cash, but again, this quarter, it's tightened up again. So we are mindful of that. So, debt is not that bad, if you ask me. Yes, we are reducing the debt. It came down by about, if I'm correct, let me just look at the numbers before I answer that. But the debt did come down compared to last quarter. So we have been reducing debt last quarter and last year too, right? So we are reducing the debt. So we are being careful when it comes to the debt-related obligations that we have. Just one number, last quarter we were about 115, now we are at 101. If you look at on March 2020, we are about 116. So we did reduce it, but not significantly, but it is coming down. And we would be paying down more debt as we go on. Every quarter we pay down the debt. There are some term loans, but working capital is something that we would want to, and we would like to keep it, because today the cost of finance has come down dramatically, specifically in the international markets, where we are paying around 4 to 5%, which is almost nothing, if you ask me, and that is something that we would be keeping. If we have cash, we do want to make investments into R&D. We do want to make investments into probably new geos that we want to go into, specifically Europe. Europe, we've been investing a lot over the last few years, and we would continue to make investments. With the example that I said, we did hire a new European head, and we would have to build around a team around him, and we are going to do that. We're also we have a presence in Poland. I think you're aware of that. With the labor market tightening, we're looking to see if that is an area we should invest in growing when it comes to hiring people too. So we're looking at various things. So we are making investments. We are still a growing company. So we would always have some debt, but if you look at the debt to equity ratio, we're at 0.24%, which is very small. So that is something that we would continue on. So to answer your question, Gopal, we will reduce it, but there will be some debt always.
Thank you. Thank you, Niranjan. And my last question is, the employees growth also I could able to see from 1,400, 600. So any focus on improving the strength organically, so any business to come. So any focus on that too in the numbers of employees?
Yes. Yeah, there are, because we are going more and more into the European market space, some of the business that we would be doing in that space is different from US space. So we would have to build up new divisions within the company, either by organically or inorganically. In addition to that, Karanjit currently has over 100 openings that he wants to hire. Srini has some numbers that he wants to hire. So because the pipeline is building up, and it's a challenge now to hire people that was not there earlier, but that's a good challenge to have. We are coming up with creative ways of hiring or attracting new talent and retaining the existing talent. So we are working aggressively on that. Karanjit, do you want to add anything to that, Karanjit?
Yeah, as Niranjan said, we have about 100 odd positions that we're hiring for at this point. But yes, as all of you would be aware, while it was widely expected that with COVID, people would be, it will be a stabler market, but right now there is a lot of challenge in onboarding talent. It is kind of really challenging to onboard people, and we're working on that. Plus, we're also trying to kind of cross-skill or do mid-career changes for people. So those are the kind of initiatives that we're taking at this point to be ready for whatever all the pipeline as well as all the customers that we're sending.
Thank you, Karanjit. Gopal, any other questions, Gopal?
No. Thanks, Niranjan, for your answers.
Thank you, Gopal.
Thank you. The next question is from the line of Mithun Shankala from an individual investor. Please go ahead.
Hi, Mithun.
Good evening, sir. Yeah, hi, good evening, sir. Nice to hear the numbers, what you have come out with. And to be very frank, I'm a very old investor in your company. It's been almost 4 years since I've invested now. And I just heard news that this time the company is trying to pay a dividend, which is excellent as of now. And my only concern, I would say, or probably as an investor, my only dilemma is that in spite of being invested in your company from almost 4 to 5 years, I'm still to get a return from your company. It is one thing which constantly bothers me. Like, from the lows of, say, March, April to the highs of today, it's been a tremendous comeback from the company. Every time I think of exiting, you come up with something new, and I am forced to stay invested in your company. But then again, in spite of all these years, I'm not getting the kind of returns what I expected. So, what would be your view on this part of this part?
Mithun, first of all, thank you for staying invested in the company. You are correct. Our stock price is undervalued. There's nothing I can do about the stock price point of view. Operationally, there were a little bit of challenges that we have fixed, and now we're in a better shape than where we were earlier. Now, is the stock price a true reflection of what we have achieved from, let's say, 4 years to now? No, it is not. But we are doing everything we can when it comes to giving out information to the market, to the shareholders, meeting analysts, having analyst calls, and also going to some of these business channels to talk to them, writing in business-related articles, doing blogs. We're doing everything that we can. I don't know what else we can do. I am open for suggestions and ideas. We have hired multiple, investor analyst companies or marketing companies, and they were not able to deliver also. We are making every effort that we can we agree, right? You probably are aware that we are trading probably between 10 and 12 times lagging EPS today, whereas the industry is probably trading at 30. So I don't know what I can do to that to improve that, but I'm open for ideas. If you have something specific, Mithun, would love to chat with you offline and see if we can make some more efforts. We would be willing to do.
I mean, and that's not a problem as yet. I mean, I've just seen that there have been investments done from the FIIs, FPIs, and probably from the domestic investors in your company, and the percentage has increased, say, if I'm not wrong, from 0.09 to somewhere probably about 1.6, which is great. I mean, that gives the confidence that people are coming forward to invest in your company, which is good for the future. I mean, I'm not too sure if that has happened or not, but I've just read it. If you could just elaborate on it.
So I don't know the exact shareholding of this. Whatever we are reporting to the exchange, I have not looked at the number during the last few weeks because we are busy with this audit part of it. Would be happy to call you back once I get a handle on those numbers. If you don't mind, can you reach out to Anupam? We don't have your contact details. Anupam would get me your contact details. We would reach out to you and give you the information that you're looking for there. And one of the things also, Mithun, people were pointing out is that people are some of the investors and analysts have said, the reason why big companies or big, funds are not investing is because of dividend paying also. That is one of the reasons why we did that dividend announcement this year. Also, I wanted to keep my promise. I don't know if you recall, probably 7-8 years back is when I said I would look at giving dividend in 21, 22. Because I felt that is when we would be in a better shape, both from a revenue and a cash flow point of view. And this is 2021 calendar year, and we wanted to keep our word, and we looked at it. We are in a little bit of better shape when it comes to the cash flow than where we were earlier. So we felt that we would start off with a 5% dividend this year, and we'll revisit it next year to see if we can do much better than what we did this year. But that is something that we want to keep our promise, and we kept our promise when it comes to the dividend side of it. So hopefully with this being the tag of dividend-paying company also, from what I hear, is going to help in the market, and that's another reason why we did this.
Yeah, but I guess that's a very positive sign for the company, because once you start paying dividends, that is where we come to know that the debts have come down for the company. Only when your debts come down would you be in a position to pay a dividend to the shareholders, which is, I probably think, is a very good sign for the future. And I hope for all the best for the future as well.
Thank you, Mithun. Appreciate it, and please continue to stay invested. There's a lot of good stuff coming around.
I'm just waiting for that.
Okay, so there's at least from the operations side, right? I can't comment on the stock price.
Sure. All the very best, and just looking forward to for the next year.
Okay. Thank you, Mithun.
Right. Thank you so much.
Thank you. We would request the participants to please press star and 1 to ask a question. The next question is from the line of Mohit Jain from MNM Investments. Please go ahead.
Hi, Mohit.
Sir, I just want to come back on the same thing what Mr. Mithun has just said. You have seen that your company is coming at least once a year, and sometimes in CNBC or sometimes in Business Today, your Z Business. You are coming regularly. They are also forecasting a good company for you. But as Mr. Mithun said, it's not being actually implying the prices. And one more thing, I just wanted to ask this, since now I think hardware division is no more required, so margins should increase actually, but the margins are not that higher side. Why is that so?
I think I did touch upon this, Mohit. I will, restate it. We have more than, 40% of our employee base outside India. For a company of our size, that's a big number. Whereas other companies have, probably 90% of their employee base within India. So that is a reflection of the margins that we make. If we get to India, the gross margin is close to, give you a perspective, right? Gross margin is close to about 50%. Whereas when you go outside India, when we do the delivery from outside India, the gross margins are around 30%. So that itself, the 20% difference is coming. And because it's a repeat dollar parity is there, only 10% of the business is coming from India, 90% is coming from US. So the margin pressure is because of that. We have tried unsuccessfully before COVID to move these projects to India. And I think lately the customer is willing to work with us to move these projects to India. So there will be improvement in the margins. Now coming to your question on the hardware side, it's not a hardware division that we have. When we do solution offering to our customers, mostly when it comes to the government customers, there is a mandate that we have to provide the hardware to, not just the software. And typically what happens is the hardware cost is always more than the software side of the business. Hence, you would see the skewness when it comes to that we make on a project, like I said, for a government-related ones. Okay, but we don't go sell hardware. That is not the business that we are in. But we do partner where required only to provide a solution to a large project that we do provide that.
Okay. Thank you.
Thank you, Mohit.
Thank you. We would request the participants to please press star and 1 to ask a question. The next question is from the line of Amit Kumar, an individual investor. Please go ahead.
Thank you for your opportunity. I think it was a pretty good quarter, and I just want to wish best of luck to the management to provide a good result in the near future. And thank you for the dividend payout. And could we expect the same kind of dividend payout and an increase in dividend payout in the year coming down?
Yeah, I think given, I guess I want to caution that, right? I'm worried about what the impact of COVID third wave is, right? If we continue the way we are, absolutely, we would be able to give a dividend next year also. But, we would revisit that based on where we are next year and the cash flow situation of the company. But, the intent is there, but, we'll have to see how it pans out, and we will make that. I don't want to predict today, but the intent is there. Yes.
Okay. I just want to wish the management good luck, and I believe the share price is really undervalued, and I believe that the company share price would be realized pretty soon in the market, and the true potential of the share would be realized in the market pretty soon. And thank you for this opportunity, sir.
Thank you, Amit. Appreciate your comment.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question, may press star and 1 now. The next question is from the line of Mayur Zamani, an individual investor. Please go ahead.
Hello. Yeah. Good evening, sir. Yeah. Hello. Good evening, sir. I have been an investor in your company for the past 4 odd years, as Mr. Mithun is there. But what I can see is, we do not have any. For example, if you just see, we had only one analyst or maybe investor covered in this call. All are individual or retail investors. So to further to the suggestions which you invited, if we can have good some good brokerages or analysts coming into our con calls and then understanding our business model, and as you said, why it should not be valued at 30 times and why it is at 10 times and all that. But if we see, from the lows of March 2020, we have risen 4x. That is, I have seen the value of around 20 odd rupees of our share, and currently it is 85 odd rupees. So it has risen, but it has not risen to the extent as expected by all the other participants and based on our performance as well. So can we have good research analysts coming and tracking our company, seeing our future potential and all that?
So we are working with a few research analysts also. There were a couple of, research reports that were given out, but looks like that didn't help. So we are continuously working with others. This is actually, it's two-way, right? We reach out and they reach out. So it's a combination of both. We are working with a few of them. I'm hoping that within the next probably quarter, maybe two, there'll be another research report that's coming out.
Okay, fine. Because we are into blockchain and all other futuristic business, and not very many number of companies are into this kind. So we should be having the first mover advantage and all other such things. So if we can have the analyst immediately, so persons like Mithun, myself, and all others who have been into this company will continue to be with the same company.
Okay. I appreciate your input there, Mayur. Absolutely, we would work on that.
Okay. Thank you very much.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one now. As there are no further questions, I would now like to hand the conference over to Mr. Niranjan Chintam from Kelton Tech Solutions Limited for closing comments.
Thank you, Aisha. Thank you, everyone, for joining our Q4 and year-end earnings call. Looking forward to talking to you again. I think next quarter, or if the AGM, if all of you can please join our AGM, really appreciate it. Would love to interact with you. Again, this year also it'll be virtual, but would love to again interact and give you more information. We would love to talk to people, so please reach out to Anupam, and we will work with her to get all the information that you're looking for. And also, we are also looking for inputs as to how we can improve ourselves further. So please do not hesitate to reach out to Anupam, and we would get back to you. Thank you, everyone. So looking forward to talk to you later again.
Thank you. On behalf of Kelton Tech Solutions Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.